And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures traders, friends, and family. It's time for the market forecast for Wednesday, August the 24th, 2022. My name's John Hoagland. Thanks for trusting me with your time this morning. As always, we're seeking accurate context here, always focusing on risk management and remaining patient. It's National Peach Day. Probably some pretty good peaches out there right now. It's peach season around here. As far as economic numbers are concerned, 7:30, the durable goods numbers came out, somewhat mixed. Not a real big market mover early this morning. We are still waiting for pending home sales at 9 o'clock. The EIA Petroleum Status Report at 9:30, and a new one on the list, 10 o'clock today, Central Time. The, what is it called? It's just on the list here. Survey of Business Uncertainty. Well, maybe something new to kind of focus on or look at here is if we don't have enough. Stocks are set to open steady to mixed, very close to settlement. We've got the E-mini S&P less than a point from settlement. The Nasdaq a couple of points from settlement, just right on it right now. And the Dow looking a little bit lower, minus 30 points. Still seemingly kind of focused on balance as we get deeper in the week. We've got more and more important economic information due out. Earnings today later on. We're looking for NVIDIA and Salesforce. Nothing too tremendous as far as earnings are concerned. Apparently the Minnesota Fed Governor Neil Kashkari last night has kind of hardened his stance on rates. He even involved the Volcker-esque methods if inflation continues to increase. He's been one of the more dovish Fed members, and he's hardened that line a little bit apparently last night when he was speaking. Crude prices continue higher after more talk of Saudi production cuts and a surprise 5.6 million barrel draw by the API last night. We were trying to hang on the recap last night to see when it came out. We just kind of gave up on it, but that's a pretty good drop in inventory when they were looking for less than a million drop in inventory. The EIA is looking for a forecast draw of 933,000 barrels. So we're going to have to wait and see how that plays out. Some pretty big draws in crude stocks here in the U.S. over the past couple of weeks. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the forecast and recap and everything we do. Subscribe to our YouTube channel. You get notified when we do go live. A brief look at the VIX before the forecast this morning, down slightly at 23.77. Dollar index continuing to creep to the upside, 108.88 last I checked, and the yield on the 10-year continues to leak higher, 3.07%. Good morning to everybody. Tachyon first in the room wins the prize this morning. Shaw Cunningham, good morning. Dimitar, Dark Kevin. Denise, good morning. Serenity Trader, Terry King, Ron. Theo, Scott saw and he conquered. James Swan, good morning, everyone. Busy day, but wanted to stay patient and have a good day. That's a good plan, James. Jordy, DA, Tachyon, hypothesis is incomplete if you don't have a strategy to trade that hypothesis. And if your hypothesis is on a different time scale than your usual trading time scale, now the question is how to bridge it. Absolutely right. With each of your hypotheses of what the market is going to do, Tachyon, you want to be thinking about, okay, if this does happen, how am I going to respond to it? What is my plan? What is my strategy if this hypothesis begins to ring true. How am I going to deal with it? As far as time scale is concerned, a lot of my hypotheses do tend to come from longer time frame. I'm always looking at volume, open interest, looking at the overall health of the auction process through the session. So, you do certainly want some consistency when that's involved. I typically don't really go much below the 30-minute time frame, the 30-minute chart, because it lines up well with the market profile. So it is a bridge that you have to cross, but it shouldn't be too bad. It shouldn't be like the gorge of death where you have to answer these questions 3. George Duque, good morning. Glitter, good morning. Patrick, JD, good to see you this morning. Dan, JST, Wave, Marcelo, the Rooster, good morning. The quote from yesterday my brother was talking about, it's one of my dad's quotes, that it's easy to make money and it's easy to lose money and it's hard as hell to keep. That's absolutely true, Rooster. Orion, Frederico, my brother Rick, good morning. Love you. The Red Spider is here. Good morning. Grim Reaper Trader, Vince, good morning. Zerain, Vince, 3 Lions, Dead Letter Opener, Anissa, good morning. Sarah Hall, good morning. Prayers and love to you as well. Unicus says, quote for the day, challenges are what make life interesting and overcoming them is what makes life meaningful. Love that, Unicus. Thank you very much for posting all these great quotes of the day. Really appreciate those. Keep those up. Those are really good. GM, yeah, Eat a Peach, classic album. I know my brother is probably playing that right now. Brody, Haggle Matters, good morning, Sarah. Yeah, right, well said, Unicus, right? I love those quotes. That's wonderful stuff. Dead Letter Opener. Smoke and mirrors everywhere, right? Good morning, Trading Research. Millions of peaches for free. And Joe, good morning, still toiling away. Robert Dwyer, I've got you written down for speaking tomorrow on Make Hogue Money. Looking forward to seeing what you got and having the opportunity to speak to you. Jerry is awake. I hope John is too. Joe, Dr. VJ, good morning. Yeah, hitting the lucky like button makes this beautiful channel grow. I that's what I hear. I don't know. And Mike H, chilling with Dylan. Joe, good morning. Rusty Golfer, did a dumb yesterday. Sticking to micros today. Well, that's okay. You're still participating and feeling that skin in the game. We have group coaching today at 1 p.m. Central Time. I'm going to post the link so you can register for that, and I look forward to seeing you all there. One of my favorite times of the week is when we just get to sit back, relax, and have a bunch of traders talking trading. It's what we always did. And when we were at work, we were in a big circle yelling at each other. And after work, when we were in the bar, we were usually in a big circle yelling at each other. Robert, don't be nervous. Don't be nervous. There's no reason to, we're going to have some fun tomorrow and see if we can't make a little bit of money. I think you'll enjoy it, and I know we all will, hearing what you've got to say. Lars, good afternoon from Germany. Guten Tag. Wie ist das Wetter heute? I hope it's not schlecht. All right. So let's jump into the charts, shall we? Interesting things in these equities, totally different stories from the S&Ps and from the Nasdaq. It continues today, really thinking about keeping myself looking relatively range bound, but trying to stay patient, waiting for extremes to establish themselves before really getting too involved this morning. We are waiting for more important information. Well, today, of course, we've got pending home sales at 9 and GDP tomorrow, jobless claims, and the whole Jackson Hole Symposium thing that everybody seems to be holding their breath about. So we'll have to see what happens. Good morning, Demar and Lars. Sehr gut. Good. All right. Let's jump in and take a look here at the E-mini S&Ps first. Special situation may be in play. Let's take a look-see. All right. So on the daily chart here, we've got another test and rejection below weekly kickoff low. A little bit of a deeper dive and down below there last night, but recovering and looking like it may be opening steady to higher. Open interest, again, a drop in open interest. Yesterday we lost open interest of about 15,000 contracts. The day before, approximately a loss of 8,400 contracts. I've got the total here. Actually, we lost 12,000 total for real yesterday, and again, an estimated 15,000 loss in open interest again today. Yesterday, loss open interest up against an important inflection level. When we think about the auction process, we're always thinking about, okay, the attempted direction is down. It seems to be doing a very good job in advertising price lower, but is advertising price lower bringing in or cutting off activity? Volume has been okay in the S&Ps, but it's been cutting off interest. We've lost, 15, hang on a second, I can tell you, 15, 30, 43,000 contracts in the last 3 sessions. We've lost in open interest. 1, 2, 3. Losing open interest. That's not necessarily healthy for a downside auction. What it's going to take is new business to come in and our longer, stronger traders to need to adjust inventory, and if they decide they're going to be liquidating longs or adding shorts, that may be what it's going to take to see some open interest and a continuation to the downside. We're not seeing a lot of momentum here in the last couple of sessions. Let's take a look at the 30-minute chart here. So, yesterday we lost open interest, tested the weekly kickoff low. Overnight, we tested it back down below weekly kickoff low and rejected it before the open here, at least for now, before the open. Do we have any overnight inventory? No, I don't think that we have any overnight inventory. Are we opening inside value? Yes, we are. Did we open inside value yesterday? Yes, we did. So we're going to be looking for opportunities to maybe see as price kind of reaches extremes. Maybe the initial balance extremes will be where our opportunities are. But because we're opening in range and value, I'm going to be really trying to stay patient again this morning. Yesterday morning, patience paid because our opening range was neither the high nor the low. If I remember right, in the S&Ps. We looked higher. The high of the initial balance ended up being the high of value from the previous day. Decent opportunity for us there. We tested all the way down to weekly kickoff low, which was really, our second best trade location for the day. Our best trade location for the day was up here. Second best trade location for the day at an important inflection level. And we just kind of waffled after that. So we're inside range, inside value, stay patient. I'm going to be looking for the reaction to pending home sales. We're pretty sure that's going to be lower. What are we looking for? Pending home sales. We're looking for a drop of 4% after last month's drop of 8.6%. We're seeing earlier we saw mortgage applications drop by 1.2%. The 30-year mortgage rate at 5.65%. Imagine if you were looking at that a couple of years ago, you would have said, no way. And now it's probably going to be viewed as cheap in the near future. So, patience. Let the market establish some ranges because we're still waiting for important information. Again, that pending home sales may be somewhat of a market mover. Let's look at crude oil now. We're just about ready to open up We've got 95.80 weekly kickoff high quite possibly in play today. That would create a potential market state change. We've got step one here. If we accept above weekly kickoff high, that could be step two of a change in market state for it can move to the upside. And fundamentally, it seems that there are plenty of pressures that are seeking that to happen. Seeking for that to happen. Open interest, we added 12,000 in new contracts here. I find it very interesting, though, that 4,400 contracts in open interest evaporated. In the October contract, showing some possible short covering, but in the December contract, most of that 12,000 contracts of new open interest were in that December contract. We added about 7,000 in the December contract. So overall, we did add open interest on an up move. That's important information. Volume is off a little bit, but we got to remember we just expired the September month on Monday, so we had a little bit of a jump on Monday, and then we've kind of settled back into normal volume here. Fundamental price pressures are certainly pushing price higher. Price is advertising higher because there's lots of threats of production cuts from OPEC and the Saudis. The volume, I guess, was a little bit low yesterday, just from looking at it. Here's the 30-minute chart. So in the recap, we were looking at this saying, this is probably short covering. And in the October contract, that's what happened. We did add more open interest in future months. But those future months, you have to remember, with backwardization, those future months are a lot cheaper. We've got 93.74 as settlement for October. The December is more than $1 cheaper. If I'm going to be buying crude oil, I'm probably going to be buying cheaper front months. All right. Open interest. Overnight inventory was long, is now flat. We've just opened up in range and in value. Well, that usually tells me I'm going to try and stay patient and wait for opportunities as the day goes on. Don't forget, we are looking at the EIA Petroleum Status Report due out at 9:30 with an estimated 933,000 barrel loss in crude stocks. If it comes out different, of course, that can severely change things. Here's our opening range, which has been left now at the low of the session, and it's almost reasonable. It's 30 points, but opening in range and in value kind of says, well, if I'm not willing to risk 35 points to see if we continue this move to the upside right off the opening range, and that takes us pretty much to the high of value from yesterday. Do we take it? Do we not take it? Because it's in range and in value, I'm probably not going to be taking it. Let's take a look now. It seems like it's been a while since we were looking at the S&Ps, but here's the Nasdaq, which is, again, telling a different story. We've got the second close below weekly kickoff low here. But where's the momentum? We've added open interest the last couple of sessions. We added day before yesterday. We added more open interest today, or yesterday, I should say. What did we add? An estimated 5,800 on this push to the downside, that first close below weekly kickoff low. An estimated 4,500 additional contracts in open interest yesterday. So the auction to the downside in the Nasdaq is presenting as better than the downside auction in the S&Ps, because we've been cutting off interest in the S&Ps and adding interest in the Nasdaq. A totally different story coming from very related products. We're looking for new business down here for continuation. We've seen new business the past couple of sessions where we're basically inside extended trading hour range today. And again, a lot of that is because of what we've got facing us coming through the week. We've basically trading at settlement. There's no overnight inventory with which to look at. Our balance hypothesis, waiting for new information, is still ringing true. Tachyon, what does that mean? Well, we're opening probably relatively close to value, if not in value. Our lows from yesterday are relatively close. We've got a short overnight low here, short of the night before last overnight low. This looks like an interesting area for me. Anything up above here, we've been seeing some resistance at weekly kickoff high. This looks interesting as well, but I think our area of balance is really the range from yesterday, including last night's overnight. So I'm going to stay patient. And my hypothesis will be if price gets down to this level, I'll take a look and see if I can find a cheap opportunity. If price gets up to this level, I will do the same. And if that doesn't work, if we get up to this level, then I'll take another look for another possible opportunity. But anything in the middle here is kind of off the radar for me. Let's see what this looks like if we combine all of this into one profile. Relatively even bell curve. Whereas price, it's inside longer time frame value. Just traded to point of control. There's definitely indications that this market is ready to move away from this area, but I think that's going to happen when there is some sort of news event or economic event that happens. Let's take a look at gold now. Gold finally got a little bit too cheap yesterday. We had a pretty decent move to the upside on decent volume, but we only added 500 in open interest. There's not a lot of confidence in an upside move in gold here, at least not yet. Open interest increase was pretty feeble. Good volume, though. Inside extended trading hour range today so far. Are we starting to fall into some sort of an area of balance? That could very well be. Here's the 30-minute chart. So we've got a double distribution trend day yesterday. What is a double distribution trend day? It is, here's yesterday's regular trading hour profile. The market opened. It balanced here for an hour and a half. After that, it blasted higher and then found balance up here. We've opened in the area of rejection from yesterday. There is an increased probability that a repair day is in order today. Well, what's a repair day? We get to the point of control in the upper distribution up here, and we get to the point of control in the lower distribution down here. Overall, this is telling us that our volume point of control from the entire session is up here, and our TPO point of control is right up here. But when we have two distinct areas of distribution of time and volume, I look at those as two separate auctions. So I'm going to be looking for price to get to the point of control in the upper distribution at some time today, and price getting to the bottom distribution point of control down here. Come to the market recap. We'll see if that played out for us today. We have to see what what any information comes out and any unknown information comes out, but there's a good probability that is a distinct likelihood. Euro. All right. So, just looking here, Chris Johnson has too much pressure on the dollar index to let metals move up, and too much pressure on the dollar to let the euro move up as well. We have, what am I looking at here? Some pretty decent volume yesterday. losing 2,500. So yesterday is more like a day where we had some short covering, some profit taking down below that $1 level, that par level to the dollar. There's, however, no break in one-time framing activity on the daily chart. We had a lower high and a lower low overall yesterday, so we're still looking at pretty good downside structure. Got an inside day so far. We had volume increase below weekly kickoff low yesterday. The only thing that's missing is a little bit of open interest. And yesterday, again, there may have been some profit taking. We're going to have to see what happens again today. Here's the 30-minute chart. We got some overnight inventory to the short side here. Overnight low is going to be somewhat pivotal for us. It's even with yesterday's low. Here's I think the overnight low. I don't know if we've traded down to this in regular trading hours just yet, but this is not a very strong low. Anything that's exact as this is suspect and likely to be revisited. So we're below value. We've got overnight inventory to the short side. We're kind of up against a support / pivotal level down here on the lows. How about the 10-year? Here's the daily. So still testing weekly kickoff low. We had a decent okay increase in open interest of about 2,700 right here yesterday. Volume was increasing as we're approaching weekly kickoff low. We've taken a look down below it in the overnight session. Seeming like the overnight session here is a little bit of a dead cat bounce. Our next swing low down below here is 116.11. This amplifier goes to 11 down here. So upon acceptance, this would be an easy visual target for price to continue to move lower. Of course, it's going to take rates to continue to move higher. We're still in a yield curve inversion with the 10-year lower yield than the 2 and the 30. Not necessarily good if you're expecting not to have a recession. Here's the 30. Let's take a look. So in the regular trading hour session, finally we're starting to get a little bit of an excursion down below weekly kickoff low. Be watching for continuation. There's 4 legs to a table: volume, open interest, participation, and momentum. You start to see those, continue to see this market moving lower. And again, that 1611 area is the next swing low. Would be pretty decent opportunity to catch that downside move if it were to happen quickly. Now, our good friend Kevin Laffey sent me an email last night and talked about a little bit about what happened in the natural gas market yesterday. We're now trading the October contract, and it's approximately a 4-cent discount to the September. So you don't really have to move your levels all that much. So thinking about yesterday, so the Fremont hub is not going to be starting their abilities to export natural gas, liquid natural gas, until November. They were looking for October. They said it's going to take another month. I mean, everybody said, well, doesn't that kind of cut off natural gas? But it doesn't. It causes a domestic glut. It strands a whole bunch of liquid natural gas here in the U.S. Didn't think about that yesterday. And then you got to remember, we're trading futures here. This is a month into the future, and if we can't export natural gas, there's going to be extra natural gas here. It makes sense that the price went lower. Did not think of that, and thank you again, Kevin, for kind of pointing that out. Plus, it's quite possible that the peak heat of the summer has been passed, so we may see a bit of a drop in demand for natural gas. Let's take a look at the 30 and what kind of a day we had yesterday. We had a double distribution trend day again. We don't really have any overnight inventory in this market today. We've kind of opened borderline of a repair type day. I'm always reminded that I'm thankful that I don't trade this market. I was looking at the dome this morning. It is so thin. It's so illiquid during this rollover that I can't imagine what it's like to try and trade it. Hang on a second here. Hang on. I'm going to put this dome up. So this is the nat gas. This is the September contract. How thin is this? Here's the October contract. A little bit thicker, much better looking now than it was this morning, but still, you're looking at one or two contracts on the bid and on the offer. You're seeing breaks between the bid and the offer. There's going to be some very serious slippage if you're going to be placing stops in that market. It's just a very thin, very illiquid, very dangerous market. We had a suggestion yesterday of taking natural gas off of the market forecast and adding one of the grains. I think that might be a good idea. Where's the time machine? I wish I had one, Vince. I wish I had one. All right. Where am I? I'm lost. Here I am. Okay. It's a marathon, not a sprint, right? ACH, anything can happen. Yesterday in Make Hogue Money, you had an inkling that the S&P would peak above the value from the day before and fail. This was the high of the day. What gave you this idea? Because, Amanda, we're kind of focusing on, well, at least our hypothesis for the early part of this week was range. We're waiting for information. We were looking for the market to remain range bound. And when we looked over the overnight high yesterday during Make Hogue Money, we tested to the previous day's volume value high. When we looked above it and came back inside the overnight range, I said, okay, that's an opportunity for us. We can limit our risk and we'll see what happens. We didn't know that it was going to happen. It's all in preparing, having the hypothesis and saying, I can manage this risk. So we're going to try this. And we ended up, we had a couple of small losses in Make Hogue Money, and we ended up getting our profit target off that short after the Make Hogue Money ended. We just left the stop and the profit target, and we got our profit target. Feeling there was more to it, but we agreed on that, so that's what we did. The four legs, Anne-Marie: volume, open interest, participation, and momentum. Some European countries have increased levels of storage, so nat gas should come in. That's a good thing, right, Anne-Marie? They need it. Where's the time machine? I wish I had the time machine. Let's add bacon. There you go. Koss likes the natural gas. He's in Europe. Okay, we're going to leave it there. We're going to see about adding another product to the market forecast. It just adds more research. But I've come from a family of grain traders. My dad was a grain trader. His dad was in the grain industry. We came from the grain belt, basically. My dad was born in the middle of Nebraska. Mom was born in South Dakota. So we come from a long line of grain traders. So we'll think about doing that. Let's get ready for the morning here. Take your deep breath. Stay humble, grateful, and creative in your trading today. I will see you in the proverbial trading pit here in just a few minutes. Don't forget about group coaching today at 1 p.m. Always enjoy everybody being there and the questions. And get out there and profit today. Looking for an interesting, challenging trading day. It's all about the journey, not the destination. It's a marathon, not a sprint, as was already mentioned this morning. So trade well, everyone. We'll see you later on.